Hi, everybody. We've got a very, very special presentation for you today. As you know, in around the 20, what was it, 23rd, 24th of August 2015, the Chinese stock market crashed, pulled down markets all around the world. And normally, if you buy stock, you are bleeding profusely. But if you buy options, and particularly you buy puts, you could be having a very happy day. And so we've asked one of our students, one of our traders who uses the Waves of Profit software, to take a few minutes out of his day and just share what happened. And I'll give you the Coles Note version. He bought between 15 and 18 contracts, and at the end of it, about I would say about 10 or 15 minutes of trading time. It went over a weekend. He came away with $45,000 in profit. So we're pretty excited to have David on to share with us, and his coach Murray is also joining us. So welcome, gentlemen.
Thank you.
So you've been trading stocks and options, well, stocks for a long time, David, but you just recently got into options.
Yeah, that's correct. I had only traded stocks. I had never traded options, but always looked over my shoulder at those things and wondered how people are making money from them.
So on Friday, what happened?
So, well, Friday the 21st, that was the second day of the recent crash. And one thing that I noticed was in the last hour of the day, stocks were going incredibly low. They were diving. So what I decided to do, I already had some Baidu shares that were coming into the money, but I decided to buy some other shares in the last 10 minutes of the day in order to take advantage of the weekend. Now, what I felt was that over the weekend, the talking heads would be on TV talking about how bad the crash was. Investors would be reading the newspaper, and on Monday morning they would just try to offload their shares, which would then make a great opportunity for puts. So that's what I did. In the last 10 minutes, I bought Facebook, Google, Amazon, and I held them over the weekend. Now, I don't want to pretend that I wasn't nervous over the weekend, because especially since the websites that I know about don't update prices over the weekend, I was concerned that I may have made a wrong bet. But I also did feel that the sentiment was on my side, because with all these people talking about it, they would, on Monday morning, they would do exactly what I would have normally done, which was push the panic button and sell my shares before they went down. Now, for us, as you guys know, selling, if somebody panics and sells, that's a good opportunity to buy, to use your put options. Anyways, I woke up in the middle of the night on Monday and turned on my phone and saw that the Chinese stock market had crashed. And then I looked at the shares that I had purchased on Friday and saw that they had dropped dramatically. I mean, dramatically. And so I couldn't wait for the market to start. And my biggest problem was trying to figure out the right price to set my limits at for these different shares, because usually I kind of consider, let's say, a 10% increase in the price of Google means that it's this many dollars, or the contract value changes this much. But I couldn't do that because, let's say, Baidu was down, $8, and I had no mental capacity to calculate that. So, anyways, I did some guesses, and as soon as the market started, I heard that familiar pop, 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 pop.
Right.
And I looked up, and as expensive as I tried to make my options, they were all pretty much all sold by 9:33, and I made $47,000. I gave away 2,000 of it later because I got too cocky. But within 3 minutes, all my contracts had been sold, and it was part of the reason I knew what to do. I've been coached very well by Murray, and he told me about how gaps always retrace. And I also didn't want to. I wanted to be greedy, but I also wanted to get paid. You know.
Right. That's a great point.
Because you never know what's going to happen, and especially the speed that these prices move. So that's the story.
So David, what you had done is you had set a price. If it hits this price, sell, and then you'd done that well in advance of the market opening. Is that right?
I kept changing it every 30 seconds because I didn't know what it was. But yeah.
So if you had tried to set those prices when the market had opened, do you think you'd end up like trying to chase it, or would you have missed it?
Oh, I definitely would have missed it.
Yeah.
Yeah.
Because it gapped down and then it shot up in the opposite direction.
Yeah, that's one thing I would say is that if you are holding something overnight, try to set an order ahead of time, even if you're not using it, because the market moves too fast to do something like this.
Right. So you had mentioned before we went on the air that Murray had given you some advice, and one of it was about being paid.
Right. Well, yeah. I mean, the most important thing is to get paid. So I probably missed out on some profit, but I bought Facebook for $2 and sold it for $12. I bought how much did I'm trying to find my Amazon. I bought Amazon for $14, and I sold it for $41. I mean.
Wow. So those are pretty nice profits for 13 minutes of trading time.
Yeah.
Even if it did take 3 days.
Yeah, 3 days of not really sleeping, but 2 days of not sleeping, then 1 day of dancing.
That's right. Cool. So do you have, Murray, do you have anything you want to add to what David said?
I just want to congratulate him on following his plan, setting up a plan and following it, and he put his head into what people in the marketplace were actually thinking, and he created an edge by doing that. He followed his plan. He knew he wanted to get out early Monday morning because he knew that people would be taking their profits like he would, and that would just cause the stocks to reverse, and that's what they did. And so he had complete control. Even though he was pretty anxious over the weekend, he had complete control because he thought it through. And I really have to congratulate you, David. Good job. Well done.
Thanks. I just want to say one more thing to what Murray was saying about how the market reverses. I took a photo of this, and one of the options I bought was Tesla at 237.5 put, right? And I must have taken this photo 2 minutes later after everything was sold, okay? And in the bid-ask price, it's $19.40 the bid. It's $23 the ask. My sale price was $37.
Wow.
So so I'm just happy that.
So one of the things that comes out of this for me is if you're not in the game, you don't get the opportunity to hit the home runs. Like it wasn't that long ago you were not trading options. Now then you were. You got some. You took the training that we have at Udemy, and then you got some coaching with Murray to make which is always really, really important. And then you practiced, and then you went live, and you were mentioning in the last 10, 12 days you've been really successful, and then. So you're kind of in it, you're playing the game, you're seeing what's going on, you get a feel for the market, you can see the news as, we talk about following trends and don't really pay attention to the news, but there are times when catastrophe strikes, well, great. You definitely want to take advantage of the news in those situations, right?
Don't say it that way, but yeah, it's true. Yeah.
Yeah, there's a lot of people that are really sad because they've lost a lot of money, but that's the problem when you're in the stock market. It can be really risky.
Yes.
And I would say the stocks are way riskier than options based on the last week.
Mm-hmm.
People lost trillions of dollars, and you made 45,000. So, kind of shows. So I know you've got to go. You've got a meeting, David. I really want to thank you for taking time to share your story with everybody. It's certainly inspiring for me, and I know Murray's delighted at your success as well. And congratulations, and hopefully every few months we can have you on again, and you can tell us how you made another 45,000.
Well, I'm very conservative these last couple days. I just I want to retain my capital.
Yeah.
So,
good for you. Okay.
All right. Hey, thanks, guys.
All right. So this is Amazon.
Yes.
And so we're looking at Friday at about the end of the day.
This is the end of the day. So you got the whole day painted here, and these are the previous 3 days here.
So obviously going down.
Obviously going down, and it's like it didn't even have a chance. It just broke is the expression from long ago, decades ago, is the market broke, meaning that it's just heading red and there's nothing to save it.
Okay. And if you look at the hourly or the minute chart there,
yeah,
you can see that that's pretty much heading down too.
Yeah, so here's the low of the day, and here's our lovely, target prices. So it, just broke through that, couldn't really recover, and then smashed its way down on the last minutes of the day. There's no buyers in sight.
Right.
Everybody's selling off.
So
the idea of selling here was a good one because there isn't a buyer anywhere in town.
Right.
Which is why the red side is just taking over. There's nobody here, and so if we go look, so that was Amazon.
That's 495.
Yeah.
So what was Monday? So just go to the beginning of the day.
Yeah, let's just go. Here's the first minutes of the day.
Okay.
So you ended yesterday at
495.
And here you are at 463 and falling.
Right.
And this is where he got out in some ways a bit better than he expected, and because it's still, here's 1 minute candles. Oh yeah, that thing's gonna stop me from doing that. Okay, here we go. Here's 1 minute candles.
Right. So David had set his get out price somewhere here or higher, and because who would have imagined it would have gone down that far?
Yeah, it was more.
Still had a momentum going down, would have been filled, and he would have got a nice price for that auction.
Yeah, he would have got filled quite nicely on that, because then there's a whole bunch of other people, which is what Murray was talking about, that are going. The greed frenzy, as I call it, is they're thinking, it's wow, this thing's just never going to quit. It's like, well, no, it will quit. So.
Right. And then you've got the other people saying, this is low, I'm going to buy.
Yeah, it's like this. I haven't seen this price this cheap in so long.
Right. Okay, so let's take a look at Baidu.
Okay, so here's Baidu is
Friday.
So 153 is where it closed.
Yeah, and you can see it's just going down, down, down.
Yeah, you can see the daily here is running down. So it seems to be in a trend down on the daily.
Yeah. Okay, so it ended at 153, and then we go to Monday.
Yep. And it opened up at 125.
Beautiful.
And you can see that it went all the way down to 100 was the super fast, super low price.
Wow.
100 from 153. If he could have clicked fast enough.
Yeah. No, he couldn't. But what he had done is he had gone and set his sell price before the market opened.
Yeah, good job.
Pretty much the only way you could have done it.
Yes, that was about it.
because right away it's rebounding. Of course, we know it was a pretty good green day from our review that we just did. So this is one of those cases where the thing dropped and went back the opposite way. But if you did what he did, which was buy on Friday and sell as fast as you could on Monday before the stock market opened and had everything set up. And he said, when we were, and David says this a couple times, like it just went pop, 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 making that little IB's noise as you build, right?
And this is exactly what Murray's talking about, where it's like you've been running down hard, you got a bunch of people that are going to take profit and get out. And that's exactly what he did. Now, he doesn't influence the market because he's not buying the shares, but it's exactly the same thing. So here we go. You wanted Facebook?
Yeah.
So here's Facebook end of day. It closed pretty close in the $86 range.
Yeah.
And then on Monday, it opened at about $75.
Okay, so not big.
86 to 75, that's like 11-12% of the stock's value.
Right.
Stocks don't just move 12%. We're used to this with options, but with a stock, it's like, what?
Right. That's right. Cool. All right, and let's look at Goog.
Yeah. So Goog was just about 612 and a bit on Friday close.
And you can see that it's just collapsing.
Yeah, huge runaway. Like there's no buyers in sight. So the buyers are not so likely to show up on the weekend. It's possible, but
bears are in full control.
Full control, yeah. And here is Goog in the morning. We'll skip some of that. So from 612, it opened up at 573, which is a big dump. Like $40. Well, let's just see here. Yeah, it was $39 drop, but for Goog that's like 5-6%. It's not 12%.
Right.
Still a big dump. So Friday, you also had Tesla. So here's Tesla, and Vinny made money on I think this one too. He didn't hold over the weekend. Anyway, so here you're at 231, and then on Monday it opened up at 203.
And still heading down.
Yeah, so that's a 15% drop.
Yeah.
In the stock.
And you just leverage that with the options, and Bob's your uncle.
Yes.
Susie's your aunt, and you do a little dance.